Hello, ladies and gentlemen. Good morning and welcome to the show. Listen, I'm glad to have you guys here. Now, today is August 30th, 2019. Got a lot of stuff going on in the world, you know. Let's get started. Let's open up the charts right here, and I want to talk about gold. Thousands of years of human history, gold has always been rock solid money. It is really gold and silver are the only real true money out there. And for thousands of years, it's been this way. Suddenly, in 1971, Nixon decided to close the gold window. And he basically snipped the American currency off of being pegged to gold. It was it. That was the end of it. That was the end of the gold standard for currencies. This experiment that they started in 1971, when it first started, it was a failed experiment, but they've been able to carry it out for all of these years with money expansion. But ultimately, it's coming to its conclusion. It's coming to its conclusion in the next few years. And they're going to go back to gold. Gold is going to have such an integral part of the world's financial system, I cannot begin to express to you guys the importance that gold is going to take in the financial system that's going to be built in the next 5 years. Huge changes are going to take place in the next 5 years. Mega mental monster changes to the world's financial system. Cryptocurrencies are going to play a part or a role in this, but not to the extent that gold's going to play. Gold's going to play a mega role in this, and this is why China has been accumulating, Russia has been accumulating, world central banks have been accumulating. Yes, they manipulated the price of gold and silver. To what extent? I think to a fantastic extent. I think it's going to come out in time just to what extent they manipulated the price downwards. And we're still under the effect of these downward price manipulations. But you know what? Negative rates are extremely toxic. Gold at record highs by the end of the year. I'm going to tell you what. Gold's taken off on a rocket ship to the moon, and this is not going to stop. Let's take a look now at the gold-silver price today. And we can see that they're not really breaking down or moving to the downside any. They've made some really big gains lately, and they're holding them. Look, here's silver, 1841 ask today. It's up 8 cents on the day, and it's staying in the middle of the new range that it's created for itself. Just a few months ago, when the silver was like $14 and sentiment was really, really bad, people were thinking it was going to go to 10. Well, here we are at $18.41 and climbing. Strong, strong. Let's take a look now at gold. 1526, 1527 ask. And it's in this same thing. It's holding its range. It's holding its price gains above $1,500. I'm going to tell you what I think, and this is my personal opinion only. It's not financial advice or anything else. I would say that these prices still look rather cheap to me compared to where it's going. Believe me, for those guys out there, some of them are they always do that. They always say, oh, I missed the boat. You haven't missed the boat. This boat has not even left the port yet. The gangplanks are still attached to the boat. You can still walk right on board. You know what I mean? You have not missed the boat. They haven't pulled up the anchor. They hadn't left port yet. It's getting ready, though. It's like last call. You better hurry up and get on board or you're going to miss the boat. You will miss the boat. Let's take a look now at cryptocurrency market capitalizations for today. And cryptocurrencies are not doing so well right now. It's down to $248 billion with a Bitcoin dominance of 69%, you know? And we see these coins have taken a little bit of a beating in the last few days, all these coins. But cryptocurrencies are going to do rather well, too. Thinking about doing a show, tell what my opinion is on why the central banks are accumulating gold. I think I'm gonna do a show on that. I'm putting it together in my head, When I'd like to do a show, I don't read from a script or anything. In fact, before I do the show, I don't quite know how it's all gonna go or how it's all gonna fit together, It just I just kind of wing it, And anyway, just like I do these shows right now, I'm just winging it, I don't know what I'm gonna say next. I'll tell you the truth, honestly. Uh, let's take a look now at the Dow for the day and see what's going on. It should be open. Let me see. Right now, yeah, I'll open for 1 minute, and it opened 1 minute ago, and it's up 123 points on the day. I like to time this show exactly when the Dow opens up here because it's 9:30 Eastern Standard Time. Here it's 10:30. See, this is Atlantic time, so stuck out on the ocean a little bit further than Eastern Standard Time. And so it's 123 points up on the day. This is a fool's rally. Because you'd have to be a fool to invest in this rally. But I'm going to tell you what. I'm going to shock you guys a little bit. I think the Dow's going to 30,000. You heard me say it. I think the Dow is ultimately going to 30,000. But what's going to drive it there is inflation of the monetary supply. That's what's going to drive it there. That's why the Dow ultimately, I believe, is going to go to 30,000 because inflation's going to drive it there. But first, the Dow's going to take a tumble, I think. The Fed's going to step in and react. And then we're going to see the really low interest rates. Then we're going to see loose monetary policy. And then we'll see them drive the Dow up to 30,000 or higher, But it's going to be after the Fed reaction. But you know what that's going to do to gold, silver, and cryptocurrencies when they do that? And what that's going to do to your dollar and your savings and your bank account? The dollar index might not change that much. Because what's it's being compared against, most of the dollar index is the euro. And look at what they're doing with the euro. Stimulus up to here with the euro, and that's what the dollar's mostly being compared against. It's ridiculous. Let's take a look now at oil prices, and we can see a steady increase over the last 5 days. It's just slowly sliding up there. It's down a little bit today, marginally, but it'll probably end the day a little bit higher. Let's take a look now at U.S. Treasuries. And you see Treasuries backing off from the yield curve inversion just a little bit today. It's only marginal movement, though. U.S. 30-year is still under 2 basis points. Under 2%. 1.9 right now, 1.98 on the U.S. 30-year, and it's still under 2, And now if we move down, we can see that the U.S. 1 month is still higher than the U.S. 30-year, so we still have our yield curve inversion. Today's movement is only small. It's not even 1 basis point on most of the... So bonds basically today aren't moving very much. Let's take a look now at the U.S. dollar index. And what we see is 98.48 on the U.S. dollar index. Now, I took a look at Deutsche Bank today. Deutsche Bank's doing okay. I don't know. This restructuring of Deutsche Bank, in my mind, can only lead to one thing. It's like, how can something become profitable if you got a business or a corporation, if you just basically start trimming all of it back, trimming it back until all that's left is a core. of a corporation or something. It's not going to be profitable ultimately in the end. So I don't see this as actually working, these moves that Deutsche Bank's making. But all of this cutting that they're doing is basically making it so that they're not bleeding the money out quite as bad as they were. I mean, they're not losing money probably quite as quickly as they were, but still they're cutting back on their profitability as well, you know? And basically all they're doing is making the bank smaller. Uh, but they're desperate to stay alive. And they are just like Italy's doing exactly the same thing. Italy is all it's doing is postponing the inevitable with Italy and with Deutsche Bank. These are two huge problems in the European Union, amongst a lot of other problems. I don't see this as being the biggest problem in the European Union now. The biggest problem in the European Union is satisfaction to people. People in the European Union have lived a good life for a long time now, since World War II, basically till now. The European Union, the people in Europe have had the good life. You suddenly take that away from them, it's just like taking a lollipop away from an infant. He's going to be upset, big time, you know? And basically that's what this crisis that's coming threatens to do. And so there's going to be an awful lot of problems coming up. I see the European Union ultimately, in the end, fragmenting as this depression. I'm not going to call it a recession. A depression hits. This is going to be a worldwide depression. Just like back in 1929 when we had the Great Depression, this is going to be the Greater Depression. And they're going to do what I call the Great Print. Listen, thank you guys for listening to this report, and we'll catch you very, very soon again. And you guys have a great day, and give me a thumbs up. Bye-bye, guys.